Happy Thursday out there, Team 42. It's your skipper here, Darius Dale, to present our macro minute for Thursday, October 20th, 2022. So, in our economic release spotlight today, we're actually going to focus on some of the enhancements we've made to our crowding model, which we use to generate tactical trading signals in our leadoff morning note. So normally on this program, we call out a few highlights from that economic release spotlight, which are usually fundamental in nature as it relates to our fundamental outlook, our grid models, et cetera. But now we're going to spend a little bit of time talking about some of those enhancements. We've been back testing different measures of implied volatility premia, different measures of skew across multiple deltas, across maturities, and ultimately decided that, not decided, the data decided for us, that the 1 year normalized 1 month 25 delta put premium is actually the best sort of measure to use to identify, crowding from a tactical standpoint on the put side. And conversely, on the call side, the 1 year normalized 1 month 10 delta call premium, these YOLO calls tend to be most predictive of near term returns from a reversal standpoint. So just taking it to the chart, what we're showing on the x-axis in these charts is the 1 year z-score of 20 day realized volatility. So if realized volatility is above the mean on a normalized basis, it's a positive value in the x-axis. It's a negative value in the x-axis here. If it's below the mean, so what that's trying to proxy is from a flow dynamic perspective, it's trying to proxy low realized volatility with a negative value, which means the underlying likely hasn't corrected or finished correcting. Where conversely, if you have from a flow perspective, if you have a positive value here on the y-axis, or on the x-axis rather, it's high realized volatility. The underlying likely has corrected and or has finished correcting. And then on the y-axis here, as I mentioned on this put scatter plot, because again, there's two different scatter plots here. The put scatter plot, we're showing the 1 year normalized 1 month 25 delta put implied vol premium or discount. If it's a negative value. And what this is designed to do is identify, are investors really paying up relative to realized volatility for 25 delta puts, or are they not paying up? And we're also pairing that with, the secondary lens of, okay, has the asset corrected or has the asset not corrected? So naturally, when you're in this upper quadrant here, you have very positive flow dynamics from a tactical trading standpoint. You have high realized volatility, which means your underlying is likely corrected or finished correcting. And the options market is paying a premium to hedge for 25 delta downside protection. So this is naturally the kind of place you want to be looking for if you want to be buying the dip in different exposures, or introducing a call or establishing call upside call exposures in your portfolio. And then conversely, when you're in the bottom left of this chart, the flow dynamics are extremely negative. You have low realized volatility. The asset is likely not corrected or finished correcting. The options market is paying a discount to hedge for downside protection. So that's a really negative state. So just wanted to flag that change this morning. And then on the bar chart here, for those of you who subscribe, just giving you guys some additional insights on how to read this. So on the bar chart, so on the x-axis here, we're just showing the y-axis from the previous chart, or the chart on the left rather, and in the brackets we show the x-axis value, the 1 year z-score, 20-day realized volatility. So just keep your eyes on this kind of these indicators here, or those are not the indicators, the ETFs there, because we'll touch on that in our Longbow dashboard in a second. Just looking at the call scatter plot, so similar analysis, but what we're trying to do here is try to identify where is the market overpaying for YOLO call exposure relative to realized volatility. So from a flow dynamic perspective, when you have the market overpaying for YOLO call exposure, that's a positive value on the y-axis here in terms of the 1 year normalized 1 month 10 delta call implied volatility premium, or discount if it's a negative value down here. So going back to the same flow dynamics, you have low realized volatility, which means the asset is not corrected or is not finished correcting, and the options market is paying a premium for YOLO call upside. So this is a market that likely means you have an exposure that's probably at the highs or near the highs, and the market is, or not necessarily near the highs from a medium-term perspective, from a short-term perspective. Again, what we're trying to do is identify tactical trading setups. So as Bitcoin actually got caught in that circle, because this is definitely something we called out in our leadoff morning note this morning. And then conversely, when you're down here, flow dynamics are actually extremely positive to be betting on a reversal there. So that's high realized volatility. The underlying is likely corrected or finished correcting. And then the options market is paying a discount for YOLO call upside. Again, the reason we're looking at 10 delta call implied volatility premiums and 25 delta put implied volatility premiums is because those have we found that relative to all the different measures of skew, implied vol premia across different deltas and maturities, those things by far back test the best in terms of identifying these tactical trading setups. And so one thing I just wanted to flag this morning, going back to, kind of looking at our longbow dashboard, so we have industrials, investment grade credit, ILQD, and then small cap value there on the crowding put scatter plot in terms of, these are good tactical long opportunities the options market is presenting you with. And then on the short side, you got natural gas and Bitcoin. These are negative opportunities that the market is presenting you with. So just taking it to my longbow dashboard, we can sort of kind of identify what some of the opportunities, some of the trading range is associated with that here. Just looking at my longbow dashboard here, we got Bitcoin. It's still bearish. It's kind of in the middle of its trading range. You'd like to see it in the upper kind of upper third, upper fourth of that trading range to take advantage of that crowding signal that we just highlighted on the short side there. But we did find things like, going back to the emerging market dollar debt, EMB. Where's that at here? I'm getting old. My glasses are I'm getting too old to read this. Here we go. Got to make the font bigger. But EMB is getting close to oversold there. So this is be a good opportunity to start, nibbling if you're buying short-term calls, or certainly this is not the kind of exposure to be shorting at this particular juncture, given the positive crowding signal that you're getting from that model. Same thing with LQD as well. Again, not necessarily saying go out and get long these things, but obviously a lot of investors have been short fixed income securities throughout the year, which has been very appropriate call. Certainly we're not losing money on the long side of duration. We've made quite a few good calls this year, getting investors out of the long side of duration before some of these bigger moves. And this was this most recent big move to the downside, and in duration risk, duration security sensitive assets is definitely something we did a good job of helping investors avoid. But anyway, getting back to LQD, which has that positive crowding setup, getting close to oversold here as well. So different good risk reward in from a longbow trading range perspective when you want to marry those two signals, because that's where the alpha is. It's taking what the market is giving you from an options flow perspective, and then marrying that with the quantitative fundamentals from a trading range perspective. The world's best trading range is here on the longbow dashboard. So with that, Darius Dale presenting our macro minute for Thursday, October 20th, 2022. Best of luck out there. And if you want to get these crowding signals in real time on a day-to-day basis, 6 days a week, definitely subscribe. These are obviously exclusive. Our risk management signals, anything that can help you actually make money in financial markets, is very much behind the paywall for our 42 macro subscribers. So we appreciate them. We appreciate you for tuning in. Catch you back here tomorrow.